You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show. The Peter Schiff Show.
Thanks to LegalZoom for supporting my show. LegalZoom helps business owners like you take your first step and every step after, from reliable business formation to experienced guidance in legal and tax. Launch, run, and protect your business to make it official today at LegalZoom.com and use our promo code SCHIFF to get 10% off any LegalZoom business formation product, excluding subscriptions and renewals. Offer expires 12/31/2024. Thanks to Lucy for supporting my show. Go to Lucy.com/gold and use promo code GOLD to get 20% off your first order. Lucy has a 30-day refund policy if you change your mind. Again, that's Lucy.co/gold and use promo code GOLD to get 20% off. Well, I just got back from New Orleans a couple of hours ago, and I'm doing this podcast, squeezing it in between trips. I have an early morning flight for Thanksgiving week, family vacation, although I will be doing at least one podcast, I believe, from my vacation. So it won't be a complete vacation because I'll at least be doing this podcast. You know, I was at this gold conference again, the New Orleans conference. It was the 50-year anniversary of that conference. In fact, I did meet a couple of people that were at the conference specifically because I spoke about it on the podcast, and that's always nice to meet people. But you know, compare the mood of that conference. You know, subdued. I don't know, maybe it was 500 people there again. I mean, it's not overwhelming, despite the fact that gold has had the best year between conferences since I can remember. I remember at the last conference, there was a lot of discussion about whether or not gold would make it above 2,000. I was one of the people there that thought that it would. Of course, I wasn't the only one. It was a gold conference, so there were people that thought gold would make it above 2,000, but it was below 2,000. And between that last conference and this one, we've had this explosive rally. You would think, oh, there'd be a lot more excitement, a lot more enthusiasm, but not really. I mean, I really couldn't tell much of a difference between the environment this year and the environment last year. I mean, there's just not a lot of excitement yet in the gold market, despite the fact that gold actually rose almost 4% on the week. It closed at 2,715. So back above 2,700, we're only about $35 below where we were when Trump surprised the markets, or maybe not surprised them, but Trump won, and that inspired a big rally in the dollar and a decline in gold. Well, gold has almost recovered all of that. In fact, if you look at its record high from a couple of weeks earlier, we're only about 2.5% below the all-time record high for the price of gold. And if you measure gold in euros or in British pounds, as a lot of people obviously do, because there's a lot of people that live in Europe or the UK, gold closed at an all-time record high in those currencies. And remember, gold was making all-time record highs in foreign currencies before it eventually started making all-time highs in the dollar as well. And I expect that to be the case. It's just lagging a bit due to the strength of the dollar. In fact, the dollar closed the week at about a 3-year high, I think, in the dollar index. It closed at 107.5. The euro is barely holding on to a 104 handle. It got to as high as 112 not too long ago. And the entire rally in the euro is based on Trump winning. Now, I know we got some weak economic data coming out of the Eurozone last week, especially on Friday. The PMIs that came out were particularly weak. But, the U.S. PMIs have been weak too. And so I don't think it's really the weakness in Europe. It's the expected strength in the United States that traders believe will be in sharp contrast to what's going on in Europe, because we've got Donald Trump and people assume we're going to have a stronger economy. We're going to have faster GDP growth. Maybe he's going to shrink the deficits. We're going to have a stronger dollar. In fact, people think that tariffs are going to lead to a stronger dollar. I disagree, but that's what the markets perceive. So you're getting this strong dollar. But I think the markets are also overlooking a big factor, because the currency markets, I think, were still trading before Trump won under the false narrative that we had a strong U.S. economy, that we had the strong labor market. And that was part of what was underpinning this dollar, because there was a perception that the U.S. economy was in better shape than the rest of the world. And so the Fed would not cut as aggressively as maybe the ECB or the Bank of England or other central banks. But that was a false narrative. The fact that Donald Trump was elected in and of itself strongly suggests that that was a false narrative. Because if the economy was as good as the markets believed, Trump wouldn't have won. They would have elected Kamala Harris. The fact that they voted for Trump is an indication that the voters were not happy. The number one issue in the campaign was the economy. And because Trump won, that means the economy was bad. If the economy was good, Trump would have lost. But it's not just that. They're already starting the downward revisions, and nobody noticed. In fact, I didn't even notice this myself. I was on a panel earlier this morning. It was the Future of Money panel. And the problem with the panel is it was dominated by these Bitcoin guys. And I joked, I said, what are these guys even doing on this panel? Because it's about the future of money, and Bitcoin's not money. And it hasn't been money in the past, so it's certainly not going to be money in the future. And it became a big argument, especially now with Bitcoin. It almost hit 100,000. I think the high, at least on the exchange I look at, I know they're all different, it got to 99,800. I mean, it'll probably be above 100,000 maybe by the time a lot of you see this podcast. As I'm recording it, it's about 98,500. So it's right there. Obviously, I mean, it'd be kind of crazy if it didn't get above 100,000, and maybe that'll spark an even bigger rally. Who knows? So they're all emboldened, about this big rally in Bitcoin, and I'll talk a little bit about that again later in the podcast. I want to stay on a different line of thought. So Danielle DiMartino Booth was also on the panel with me, and she really didn't even weigh in at all about gold Bitcoin, but she had a lot of interesting things to say. And one of the things that she pointed out, I hadn't even heard about it, was on Wednesday of this week, the Department of Labor came out with an announcement that indicates that it's very close to another major downward revision in the non-farm payroll numbers. And this will affect the numbers from June of 2023 up until June of 2024. So an entire year's worth of jobs reports are about to get significantly revised lower, probably by more than 1 million jobs, maybe 1.2, 1.3 million jobs that the government initially reported were created. It's now going to say, oops, we're sorry, they weren't created at all. Now, again, if you remember, as these jobs numbers were coming out and they were being heralded in the media, by Wall Street, by the Biden administration, as showing how strong the labor market is, I kept saying these numbers are meaningless because, number one, they're going to be revised in the future. I specifically said after the election, when there was no longer a reason to sugarcoat these numbers, to try to elect Biden or Harris, right? We could get the truth. And it's starting to come out. There's going to be this huge downward revision to a year's worth of numbers. And of course, there were other reasons that I said these numbers should be taken with a grain of salt because of the quality of the jobs, the fact that they were all government jobs. And by the way, I'm sure that when they do these revisions and they knock off maybe 100,000 jobs a month, they're not going to revise the government numbers down. They're going to revise the private sector because, after all, you would expect that the government at least knows the jobs that it created itself, right? I mean, that's easy, right? The government just takes a look at the people it hired, right? So those numbers are probably accurate. It's the private sector jobs that are completely inaccurate, especially when so much of it is based on a guess, right? I talked about that with the birth-death model, how, they just seem to grab these numbers out of a hat. So it's going to be even worse because all the job losses are going to come from the private sector. And so now the percentage of the jobs that were created that were from government is going to be even bigger than before. And again, remember, these are the non-productive jobs. These are jobs that we don't want. These are the very jobs that Donald Trump says he wants to eliminate. Great. But of course, if we eliminate all these jobs, right, a lot of people are going to be unemployed because we're going to be getting rid of most of the jobs that we just created. Now, that's a good thing in the long run, but obviously in the short run, it's not going to be good for all these people who find themselves unemployed and can't make their mortgage payments or all these other things. Of course, we can't fire them. So if they had to get severance pay, they may be able to make these payments for a couple of years before they ran into trouble. But the point is, the weakness of these reports is going to be even greater when we eliminate so many of the previously reported jobs. I mean, think about it. I don't remember what the estimates were, but I looked at some of the numbers. Like June of 2023, the government said we had 240,000 jobs. Now they're going to probably say, oh, it was 140,000. In July, it was 187,000. And they'll come back and say, oh, that was just 87,000. Those are big differences. It's most likely that if you reduce any given month by about 100,000 jobs, that you're going to end up turning a job number that was a beat because it was above estimates, and it's going to end up being a miss because it was below estimates. So it means all of the headlines were wrong. The market reaction was wrong, right? If the dollar rallied, if gold sold off, if the market rallied based on a beat, but it wasn't a beat, it was a miss. And to the extent that it was a miss, it's an even bigger miss than that. So this is proof. I talked about Powell specifically because when Powell was questioned in these press conferences, he kept talking about how we have this super strong jobs market, labor market. He was basing it all on these government numbers. Well, it turns out the government numbers were completely wrong because they're revising them down. So is Powell going to come back and say, well, I guess I was wrong? We didn't have a strong job market? I mean, I was pointing out in real time that the Fed should not make any policy decisions based on government numbers because the government numbers are inaccurate and they're also biased. There's a political agenda behind these numbers, and the Fed needs to recognize this. No, but the Fed was making policy decisions based on inaccurate numbers that are going to be revised. So what, does the Fed now have to go back and revise its monetary policy, go back a year and say, oh, we should have done this because the labor market is a lot weaker than we thought? What's going to really surprise Powell in the next year is going to be the realization that the strong economy, or the economy that he thought was strong, was in fact weak. And, he refuses to acknowledge that because one of the questions, and I talked about this in a previous podcast, but one of the questions he got from a reporter was, what did you learn from the election? What does that tell you about what people think of the economy? And he refused to comment. Now, maybe he refuses to comment, but he didn't, not think about it. I mean, how could he not think about it? He sees the results of the election. It's got to dawn on him that this must be a rejection of Bidenomics. It must mean that the economy is not as strong as we thought because the voters don't want to continue this economy. I mean, if it was a strong economy, they would want it to continue, right? Who doesn't want more of a strong economy? The fact that they wanted to throw the bums out and that the economy was the number one issue is going to show Powell, that maybe I'm wrong here. Maybe the economy isn't as good as I thought. Well, now the numbers are going to confirm that the economy wasn't as strong as he thought. In fact, we're going to be in a recession pretty early. I mean, I've been saying that the economy was in recession pretty much all of last year. Maybe they'll start to revise down the GDP numbers as well as the non-farm payroll numbers. So Powell's going to be facing the reality that the economy is much weaker or in recession, but that inflation is stronger than expected, that inflation is going to be rising just as the economy is falling. And the one thing that the Fed has no contingency plan for, that it simply hopes doesn't happen, is exactly what's going to happen, and that's stagflation. Anyway, we got a quick commercial break. We'll be right back, so stick around. When creating your own business, the most important part is your ideas. So why let the headache of registering your business hold those ideas back? It's time to learn about a great idea that will help keep you going and growing. LegalZoom. LegalZoom has everything you need to launch, run, and protect your business all in one place. Setting up your business properly and remaining compliant are things you want to get right from the get-go. But you don't have to strain your brain or your wallet. At LegalZoom.com, you take care of business legal needs in just a few clicks. And if you need some hands-on help, their network of experienced attorneys from around the country has your back. Launch, run, and protect your business to make it official today at LegalZoom.com. And use promo code Schiff to get 10% off any LegalZoom business formation product, excluding subscriptions and renewals. Offer expires 12/31/2024. Get everything you need from setup to success at LegalZoom.com and use promo code Schiff. LegalZoom.com and use promo code Schiff. LegalZoom provides access to independent attorneys and self-service tools. LegalZoom is not a law firm and does not provide legal advice, except where authorized through its subsidiary law firm, LZ Legal Services, LLC. Please be sure to use our code Schiff. So I talked about the government job revisions. And, after Danielle DiMartino Booth told me about it, because I hadn't heard about it, I went to search the internet, and there were really no articles written about it. So it's just completely under the radar. I found one blog that talked about it. But other than that, even Zero Hedge didn't do an article on it. But nothing in, the mainstream media to point this out. Now, maybe the left-wing media doesn't want to highlight this because obviously, this makes Biden look bad. But once they start doing these type of numbers when Trump is president, believe me, the media wanted to whitewash the economy when Biden was president. They wanted to pretend the economy is great. Believe me, they can't wait to report on a bad economy once Trump is in charge. In fact, the whole narrative is going to be that the economy was great when Trump inherited it, and now he wrecked it, right? So that now we're in this bad recession, but it's all because of Donald Trump and his policies, right? That's the narrative. They've already got that scripted, and they can't wait to do it. But there was no media coverage at all of this negative news story. That's why I didn't even hear about it. And then I tried to do more research. I actually found the government report from the BLS that is online, but I didn't find any articles that really linked to it. But they're going to come out with these official revisions. And maybe they're going to do that next week. I'm not really sure. But they indicated that this is coming. Now, I mentioned that gold had a good week, was up almost 4%. Gold stocks were up a little bit over 4%. But considering how much they crashed, that was a very subdued move. In fact, the GDXJ on Friday was actually negative. Gold was up like $45 on Friday. That's a very strong day. And the GDXJ, which is, the smaller gold stocks, although it's not, it's supposed to be juniors, but it doesn't really have the real juniors. But, it has some, mid-tier companies that are smaller than the large cap of the GDX. But it was negative on the day. It should have been way up. In fact, I mentioned that gold itself is only about 2.5% below its record high. Yet the GDX is 13.5% below its high from a couple of weeks ago. And the GDXJ is 14.5%. Both of these indexes went into bear markets. They were both down more than 20% in about a week and a half based on the 8% decline in the price of gold. I mean, completely ridiculous. Every market, look at the euphoria. The stock market keeps going up. Positive week for stocks this week. All the indexes, solid gains for Bitcoin. Wild, euphoria there. It's like the only sector of the market where people aren't excited is in the gold sector, right? That's the only place you have fear. Every place else you have greed. Because a bear market in a bull market, when gold is that close to its high, and now here we are within 2.5% of a record high. Very good chance gold will make a new all-time record high in dollars next week. If not next week, maybe the following week. Yet these gold stocks have a long way to go now to recover, not just from a correction, but they had an entire bear market. That's how worried. That's how much fear there is in this market. There's no confidence in it, which is one of the reasons that you should be so confident. Where other people are fearful, that's where you can be brave. And when other people throw caution to the wind, like in the overall market or like in Bitcoin, that's where you need to be fearful. Anyway, a significant news story that came out, I think, yesterday on the market was the president's pick for the new Treasury Secretary. This a very successful macro hedge fund manager, Scott Bessent, is going to be the new Treasury Secretary. It was pretty well rumored. I've known for a while that he was a favorite, but I think last minute people were talking about Howard Ludnick, although I think he's now going to be the Commerce Secretary. But the president is putting together, this very pro Bitcoin cabinet. That's one of the reasons that Bitcoin is so strong, is because there's so many people that have been positive on Bitcoin that are now going to be, in the government. And they're also, of course, they're in the Senate, they're in the House. Bitcoin money has been spread around. The crypto community, I think, was the largest donors in this last cycle, right? They're given more probably than defense, the pharmaceutical industry, the crypto industry, and now they expect to be paid back, right, for their investment in these candidates. I mean, this is the problem with democracy, is you have stuff like this, and now that they want to get paid back. That the agenda of the crypto crowd is the formation of a Bitcoin reserve. In fact, Senator Loomis's new bill actually calls for the funding of that by selling gold. So she's introducing a bill that would require the U.S. government to sell off its gold and then use the money to buy Bitcoin. I mean, it's almost treason. In fact, it probably is treason as far as I'm concerned to do something like that. But it's being done as payback in exchange for the campaign donations. That's obviously what's going on. And of course, if they do that, I mean, it's great for the people who own Bitcoin, who can sell their Bitcoin to the unwilling U.S. taxpayer who is being forced to buy Bitcoin, at gunpoint. Because that's, it's the coercive power of the state, which is, the ultimate irony, right? Because Bitcoin was supposed to be anti-government. It was, it was a way to circumvent government, to get out of fiat currencies. This is a decentralized thing. It's away from government. It's voluntary. It's the free market. But its salvation now is the government. It's the government buying Bitcoin that now everybody is counting on to make the price go up. It's not the free market. It's not that people are adopting it because it's winning in the market and that it's a better money or, whatever it is. No, it's because the government is going to be doing it, right? And so when the government does it, it's not because it's a sound decision. The government is doing it to reward the people who already own Bitcoin and who supported the campaign and voted for the candidates. And so you have the coercive power of the state that's now behind Bitcoin. So it's the opposite of everything that it was supposed to represent. But it would be a huge windfall for people who own Bitcoin. I mean, they can sell it to the government. They have a huge exit strategy. the U.S. government and therefore the U.S. taxpayer end up as the bag holders of Bitcoin. This would be a very inflationary program if it was passed, if there was a Bitcoin reserve, especially if they funded it by selling gold, because who would buy the gold? Well, the Chinese, right? All the foreign central banks would snap up all the gold that we were dumb enough to sell. And then what are we going to do with the money we get from selling our gold? We're going to buy Bitcoin. And then what are the people who sell their Bitcoin to the government going to do with the money they get? Well, they're going to spend it, right? So it's all this extra demand, right? All these Bitcoin millionaires and billionaires are going to be out spending their windfall, driving up prices for everybody else. And so ultimately, if the government does this, it's good for gold because it means a weaker U.S. economy. It means more inflation. And it means the U.S. government is in a worse financial position because instead of having gold reserves, it has Bitcoin reserves, which it can't do anything with. Because if it tries to sell them to defend the dollar, it crashes Bitcoin, and there go the reserves. But again, the other thing that's even worse maybe than the price of Bitcoin going up because the government's going to buy it is the crypto industry, all the money that's being wasted. Look, a MicroStrategy also completed on the week another round. They just sold another $3 billion of convertible notes with a 0% coupon. I think the maturity is something like 4 years. But why would you loan MicroStrategy money for 4 years at 0%? Well, again, people are deluding themselves. They think they're getting a free roll on Bitcoin. And the strike price to exercise was about 50% above, or 55%, I think to be exact, above the price that MicroStrategy stock was trading at. But they don't care because the idea is if Bitcoin goes up, MicroStrategy is going to go up even more. I mean, it's already trading for 3 times the value of its Bitcoin, although it did have a big reversal day on Thursday. The stock made a new record high and then got clobbered. And so, and on Thursday, it took out the high and the low from Wednesday. So it is a potential one-day reversal, but it wasn't a reversal on the week. I mean, MicroStrategy still closed positive on the week. And so it's maybe premature to say that this insanity is come to an end, but we'll have to watch it. But what the people who are buying these convertible notes think is that, well, as long as Bitcoin goes up, MicroStrategy is going to go way up, and I'm going to make a killing on these convertible notes because I just convert and, I can sell out and make a profit. But worst case scenario, Bitcoin goes down, MicroStrategy collapses, I just get my money back, right? Because I just asked for my money because it's the option of the investor. You can either convert to stock or get your money back. At some point, people are going to realize that you can't get your money back. If Bitcoin crashes, there is no money because MicroStrategy spent it on Bitcoin. And now Bitcoin has crashed. How's it going to get the money? Sell Bitcoin? It'll crash even more. So this is going to end badly. But the point that I'm making is capital that is going into MicroStrategy, where should it have gone? Right? When the government is misdirecting, like that Mara, another company came out. They just bought a bunch more Bitcoin. The same terms, 0% coupon on preferred. But if capital is going into these ridiculous money-losing businesses that are just gambling on Bitcoin, where is it coming out of? We don't have an unlimited supply of investment capital, right? And so any capital that is directed to Bitcoin, blockchain, crypto is capital that can't go someplace else. It can't go someplace where it's actually needed to produce real goods, real things. Instead, it's being squandered. And so this is doing tremendous damage to the country. The bigger this Bitcoin bubble gets and the more of our resources are misdirected at chasing it. But, we'll see. Hopefully Donald Trump, does not, get this Bitcoin reserve. Hopefully this Loomis bill dies and it doesn't get passed. And we don't at least waste any more money than we would. If this thing did get passed. But again, long run, I think it's a positive for gold because it weakens the U.S. economy. But I'm not in favor of policies that weaken the U.S. economy. And, one of the things that I really don't like about this. And this is something, I mentioned this at this conference, that is going to be the downside, because the guys that were there at the New Orleans conference, the Bitcoin guys, they also are free market guys, libertarians, Austrian economists, so they would agree with me on pretty much everything I say until I say something about Bitcoin. And then they just think I'm just blind for some reason. But I think at the end of the day, this is going to give us a real black eye. It's going to set back the cause of hard money, sound money, free market capitalism, because that's what's going to get blamed for this collapse. And especially if the Trump administration buys up a bunch of Bitcoin only to watch the price crash after it finishes buying. People think that if the U.S. buys it, the rest of all the other governments are gonna buy it too. I think we'll be the laughing stock of nations if we do this. It's not, they think, if we jump off a bridge, everybody else is going to jump off the bridge too. I don't think the rest of the world is going to be dumb enough to follow our lead off this bridge. And again, I don't think that our politicians will be doing it necessarily because they think it's the right thing to do, although maybe they're dumb enough to believe that. But I think it's more about payback. It's about, greasing the palms of the guys that got you in office and that are promising to keep you in office. Anyway, we got a quick commercial. I got to talk about the president's new Treasury Secretary nominee on the other side of this break. So stick around. I've never been a nicotine user, but when Lucy sent me a sample of their products, I really was impressed. I tried the 4 milligram version, and it was smooth, flavorful, and really enjoyable. But for those who want more of a kick, Lucy also offers 8 milligram and even 12 milligram options. Lucy's products are made with 100% pure nicotine and are always tobacco-free, a modern, clean way to enjoy nicotine. And here's something really innovative: Lucy Breakers. These are nicotine pouches with a twist. Each pouch has a capsule inside that you can break open to release extra flavor and hydration. It's a game changer for everyone who loves a burst of freshness. For added convenience, you can set yourself up with a subscription and have Lucy delivered straight to your door. It's hassle-free and keeps you stocked up with exactly what you need. Try Lucy for yourself at lucy.co. Use promo code GOLD to get 20% off your first order. That's lucy.co, promo code GOLD for 20% off. Lucy offers a smarter, better way to enjoy nicotine. Even as a first-time user, I can tell you it's a standout product. Let's level up your nicotine routine with Lucy. Go to lucy.com/gold and use promo code GOLD to get 20% off your first order. Lucy has a 30-day refund policy if you change your mind. Again, that's lucy.co/gold and use promo code GOLD to get 20% off. And here comes the fine print. Lucy products are only for adults of legal age, and every order is age verified. Warning: this product contains nicotine. Nicotine is an addictive chemical. Anyway, so Scott Bessent is the nominee, hedge fund billionaire, obviously very successful, very bright guy. He spent some time working with Jimmy Rogers when he was with Soros Fund, and I know Jim Rogers pretty well, and we think alike on almost everything when it comes to investing and economics. So I don't know how much of that might have rubbed off on Scott Bessent, because, of course, I disagree with a lot of stuff that George Soros, and his positions. It's kind of hard to believe that Soros and Rogers were even partners, given, how they could be opposites in their politics. But one of the things that Scott Bessent has recently said, this is, what he had advocated, was the creation of a shadow Fed chairman, meaning that Trump should go ahead and nominate somebody now, like let the markets know who his pick is going to be to replace Jerome Powell, because Powell has made it clear that he's not resigning. And his term does not end until May 15th of 2026. Now, if Trump were to do that, right, he would obviously be undercutting Powell's, authority there, because this shadow Fed chairman would basically be saying, look, it doesn't really matter what Powell says because he's out in a year. So I'm going to tell you what I'm going to do in a year. And that would be like forward guidance, right? He couldn't do anything right now, but he could tell the markets what he's planning on doing in the future. Although it seems ridiculous to say what you're going to do a year into the future when you don't necessarily know what the economy is going to look like a year in the future. I mean, what if we're in a big recession in a year? Or what if, the economy is doing great, right? Obviously, there a lot could happen in a year. So it's hard to give guidance about something that's so far off. But clearly, the whole idea about doing this, and I wouldn't put it past Trump to do exactly that, is because he doesn't like what Powell is doing. Now, what is Powell doing? He's cutting rates. What doesn't Trump like about that? Well, probably he doesn't like that he's not cutting rates faster, or that maybe he thinks that rates were raised too much, because we know he wants low interest rates. And so if Powell is not going to immediately deliver, maybe he wants to have this shadow chairman reassuring the markets that don't worry, we're going to have these big rate cuts a year from now. But all that should be dollar negative. I mean, the dollar should not like the fact that this is going to be a potential policy where the Fed, where Trump is trying to undermine the Fed, undermine the independence of this Fed by saying, hey, this guy's gone. I'm not going to reappoint him. I'm going to put in this guy who's going to do what I want. And what I want is, lower interest rates, easier money. That should be dollar negative. Now, of course, Trump appointed Powell too. And I guess Powell didn't do what he wants. So now he has to make sure that the next time he appoints somebody, he's not going to get, knifed in the back or whatever he thinks Powell did. And I guess, he's probably had these conversations with Besant, who maybe he agrees with Trump that we should have easy money. Now, I know that Scott Bessent has reiterated his belief that the U.S. dollar should stay as the reserve currency. Now, of course, he's not going to say the opposite. I mean, it'd be ridiculous to say the opposite. But I think the markets are probably going to take that to mean, oh, well, I guess we're going to have the strong dollar policy, or, a return to the strong dollar policy. But we never really had a strong dollar policy. Remember, it was really rolled out, I think, under was it Clinton where we first had the strong dollar policy? I mean, it was a long time ago. Yeah, maybe it was Bob Rubin. But the strong dollar policy was basically repeating the mantra that a strong dollar is in the national interest. So every time the Treasury Secretary spoke about the dollar, or he was asked about the dollar, the response would be a strong dollar is in the national interest. And that was the strong dollar policy. I mean, that was basically the extent of the policy. But for some reason it worked, right? Even though we didn't actually do anything, supposedly we had a strong dollar because of this policy. I used to joke about, I think I wrote something about it in my first book. I think I remember saying, talking to a student, and, he cuts classes, he smokes pot, he doesn't study, but he tells his teacher he has a straight A policy, right? And so, like, I should get A's because I got a policy that says I get A's, but you don't follow through with it in your study habits. Well, the whole time we had a strong dollar policy, everything we were doing was undermine the dollar. We were running big trade deficits, big budget deficits, so we weren't pursuing policies that were consistent with a strong dollar. Just like if somebody cuts class and doesn't study, they're not, their study habits don't jive with their straight A policy. But somehow they would just expect to get A's anyway because that was their policy. So we were just expecting to have a strong dollar, even though our policies would result in a weak dollar. So even if we go back to the strong dollar policy, there's really no policy to go back to other than just, speaking about it, right? About the strong dollar. But I think that Trump and Besant actually want a weak dollar. They want the dollar to stay as the reserve currency, just at a lower exchange rate, because they believe that a lower dollar would make the U.S. more competitive in international trade. That one of the reasons that we have these big trade deficits is because the dollar is overvalued, and that a lower dollar will help our global competitiveness. Now, the problem is, we've had a lower dollar in the past, and it didn't help. In fact, I think that a weaker dollar is actually going to backfire because it will make our imports more expensive, but we'll keep importing them because we don't produce an alternative. That's also going to be the problem with tariffs. And, Bessent is in favor of tariffs. I mean, obviously, that's probably a prerequisite, although I think his approach may be a bit better than Trump's. I've read some stuff where he thinks they should be broad-based and not just targeted to any one country, and that maybe they should be introduced more slowly over time so that the markets could get used to them and prepare for them. So that would be a better approach. Of course, it'll raise less revenue for the government than the higher tariffs would. And therefore, the deficits will be bigger because we're still going to get all of these spending, all these tax cuts, rather, that are being advocated, which is going to make Bessent's job that much harder because he's going to be the Treasury Secretary when the debts are going up. Now, he's talked about the need to reduce the deficit, to reduce it as a percentage of GDP. He wants to do that with, more economic growth. Of course, everybody wants to grow out of the deficits. The problem is the deficits grow faster than the economy, and that is going to happen, especially since interest rates are now higher, and the rising interest rates on the debt are the primary driver of the deficits. Right? The interest on the national debt right now is about 1.1 trillion. A year from now, it could be 2 trillion if rates just stay where they are and all the low yielding debt rolls over. Plus, we've got the new debt that we've incurred over that year. So that's an extra $1 trillion to the deficit because it's an extra $1 trillion a year the government has to spend. So there's no way to outgrow that. There's no way to outcut that. Even if they can cut some spending, the cuts will pale in comparison to the increase just on the interest on the national debt. And of course, Social Security is going to continue to soar. Medicare, Medicaid, Obamacare, all that stuff is just going to be soaring. And so it will dwarf any cuts that Ramaswamy and Elon Musk are able to identify and then convince the government to enact through the Department of Government Efficiency. But, I used to joke about the Secretary of the Treasury because we don't even have a Treasury anymore, right? I mean, the Treasury would assume that we got something there, right? But we got nothing. We have debt. We have $36 trillion of debt. That's the Treasury. So rather than being the Secretary of the Treasury, what Bessent is the Secretary of the debt, right? Because that's what we've got. The Treasury is empty. It's bare, right? There's nothing there. But, the IOUs, we owe $36 trillion. And his job is basically to continue this gigantic Ponzi scheme. He's got to go around the world and get people to buy more debt so that the national debt can run up to 50 trillion or wherever it has to go to enable this to continue for the next 4 years. But not only does Bessent have to convince people to loan us more money, he has to convince the people who have already loaned us money to keep doing it, right? As the debt matures, the people who own that debt need to roll that debt over because that's actually the bigger problem. Let's say in the next year, the government has a $3 or $4 trillion debt. So it's got to find buyers for 3 or 4 trillion. But during the same year, over 10 trillion of existing debt is going to mature. And so now we've got to convince the holders of that debt to roll it over, to loan us back the money that we just repaid them, or we actually didn't repay them. We have to convince them not to want their money back, just to let us keep it, right? To roll it over into another security so we can keep paying interest, right? what does this sound like to you, right? We can't repay the money, right? It's impossible for the U.S. government to pay back the debt. So all it can do is borrow money from new lenders or the same lenders so we can keep paying interest on the existing debt. That is a pure Ponzi scheme. That is what the government is running, a Ponzi scheme, right? It's doing the same thing with Social Security. I mean, the government is an expert in Ponzi schemes. It's the biggest, perpetrator of those schemes, right? They should erect a gigantic statue of Charles Ponzi, right there on and Capitol, right? We have all these ex-presidents. There's a lot of statues in Washington. The statue that's missing is the one of Ponzi, because that's what our entire government seems to be based on. Yet he went to jail for his Ponzi scheme. This thing, dwarfs that. In fact, one of the jokes that I used to tell, I don't know if you ever I have some new people who are watching me. There's a video on YouTube, Peter Schiff stand-up comedy. I did this stand-up routine. And I came in second place in the stand-up. I forget who came in first, but I came in second. It was New York Funniest Reporter. So you can go on YouTube rather. You can watch my whole skit. It's about 10 minutes, but pretty much everything I said, except the last stuff on on the pornography. I won't talk about it, because if you haven't seen it, I don't want to ruin it for you. So you can go watch it. But other than that porn stuff, everything I said in my stand-up routine was just stuff that I had said in my talks. And, a lot of people, when they would come to my talks, my lectures, like the one I just gave in New Orleans, I'd get a lot of laughs. And so people would call me like a stand-up economist, because a lot of the stuff I was saying was funny. Now, the reason it was funny was because it was true and ridiculous, which is what made it funny. But one of my standards when I talked about the debt and the fact that we're running this giant Ponzi scheme, I talked about Bernie Madoff, because Bernie Madoff, when he was originally, he got arrested and he was interviewed, and he actually spoke about the U.S. government and accused the U.S. government of exactly what I'm accusing it. Right? He said that the U.S. government is running a much bigger Ponzi scheme than he did. Right? That he said he's like, a piker or small potatoes compared to the government. Right? He actually said this. And I remember when I read the article about it in the New York Times, I think where it was, the New York Times dismissed Bernie Madoff's comments and said, look, why should we care what Bernie Madoff says? Like, what the hell does he know? And my reaction was, well, wait a minute. The guy knows one thing, and that's Ponzi schemes, right? He's been running this Ponzi scheme for, a decade or 2 decades, whatever, the biggest investment Ponzi scheme in history. And, he finally got caught. So you can't say, we're not going to take him seriously, because if Bernie Madoff says the U.S. government is running a Ponzi scheme, he ought to know. He ought to know better than anybody, because he's probably the foremost expert on Ponzi schemes. And then, I would talk about the fact that when the government, we ran our Ponzi scheme, and we're out in the open about it, right? Because every time that we get to the debt ceiling, what does the government say? If we don't raise the debt ceiling, we're going to default. If we can't borrow more money, we're not going to pay back any of the money we already owe. Well, that is admission that you're running a Ponzi scheme. You're telling everybody that it's a Ponzi scheme. I mean, Bernie Madoff would never do that. It's Ponzi 101. You got to keep that quiet. You can't let the investors know it's a Ponzi scheme, because then they're not going to want to participate. But the government had so much hubris that they thought, you know what, we can even admit it's a Ponzi and we don't even care. And you know what? The lenders didn't even care. But at some point, you care. But then I used to joke about Bernie Madoff, because I said, look, instead of putting Bernie Madoff in jail, right, we should make him Secretary of the Treasury. right? Because he would do a much better job of keeping the Ponzi scheme going than anybody else. That I said he was the most qualified person for the job. I couldn't think of anybody better qualified to be Secretary of the Treasury than Bernie Madoff, given the fact that we were running the world's biggest Ponzi scheme. So we might as well have an experienced Ponzi scheme operator at the helm, because that's really Scott Bessent's job. He's got to keep everybody on board, keep all the lenders lending us money, right, at low interest rates, so that we can keep on growing this massive Ponzi scheme. But so I watch the entire stand up. You'll find it on YouTube if you search it. But anyway, I as far as the picks that Trump could have made, look, he's not a bad choice, I guess, for the Secretary of Treasury. It's a difficult job, keeping all these balls in the air. There is hope, because he said, we need to shrink the deficit. But again, Trump had an opportunity to do that during his first term. He didn't do it. Government spending increased. He's bringing back the same guy I think he had at OMB. I forget the guy's name, but he's going to come back. I listened to an interview with that guy talking about cutting government. But again, they didn't do it the last time they were in power. And what I think is going to happen is, Trump is going to be confronted with a recession very early in his presidency. So is he going to cut government spending in a recession? No, because Keynesian policy, and he is a Keynesian. What did Trump do during COVID, during that recession? Did he cut government spending? Because that's what an Austrian economist would have done. That's what I would have done. I would have said, oh, we got to make government smaller because, the economy is going into difficult times. We need to lessen the burden of government. We need to free up resources from the government back to the private sector, right? That's what I would do. I want to make government smaller during a recession. But Keynesians want to make government bigger during a recession. That's how they fight the recession. They want stimulus. So if Trump starts his presidency with a recession, he's not going to start cutting government. That's going to make the recession worse, right? Even though it's the right thing to do and the recession needs to be worse, that's not what Trump wants. That's not what he did during COVID. So he's going to want more government. He's going to want stimulus. Now, of course, he's going to want most of the stimulus to come from tax cuts, but he's not going to want to negate that stimulus with spending cuts. So right out of the gate, right, we're going to have this stimulus. And I think it's going to be both fiscal and monetary. One of the other things that Danielle DiMartino Booth said to me, and she's probably right, but I need to look into it, because I said that the Fed was going to go back to quantitative easing. And she said, well, how can they do that? They have to. You said, you think they're going to go back to zero next year and then do QE? And I said, no, I don't think they're going to go to zero, but I think they're going to do quantitative easing. And she told me that they can't do that they can't do QE according to their protocols until they get to the zero bound. So first they have to keep trying rate cuts, and they can't try QE until they've exhausted all the rate cuts and they're down at zero. That may be their plan, but that ain't going to be what they do, right? Just like, they had a plan for inflation averaging, right? Oh, we're going to target an average rate of inflation of 2%. Well, they gave that plan up as soon as it became inconvenient to pursue it. So if that's actually the Fed's plan, I think they're going to come up with a whole new plan, because they're going to realize that the rate cuts aren't doing the trick, right? Because every time they cut rates, long rates might keep going up, because the rate cuts are showing the world that the Fed is less serious about fighting inflation, is going to tolerate higher inflation. And so that's going to mean higher long-term interest rates, not lower long-term interest rates. And so I think the only way the Fed is going to get long-term interest rates down, at least in the short run, which is really what they care about, is if they go back to QE. And that's exactly what Trump's going to want. That's what the shadow Fed chair is going to want. And that's what the shadow Fed chair is going to do if the current Fed chair, Powell, hasn't already enacted that policy by the time he assumes his position in, I think it's what I say, in March of 2024. 26. Anyway, that's it for today's podcast. Again, if you enjoyed the podcast, let me know in the comment section. Also, like it, with the thumbs up. If you're not a subscriber yet to my new YouTube channel, I'm still trying to hit 600,000 subscribers. It's taken a long time for me to go from 500,000 YouTube subscribers to 600,000 YouTube subscribers. So if you're not yet a YouTube subscriber, in fact, if you're listening to my podcast on another platform, just go over to YouTube and subscribe to my channel. Maybe I can get myself up to 600,000 subscribers. You know, I'm finally about 60,000 above a million on X, but it's really taken a long time to add, that 10% to get from 1 million to 1.1 million. But if you're not yet following me on X, you could do that too. Tell your friends. Also, again, don't forget, if you're not yet a subscriber, I ran into a new total access member of Schiff Sovereign. In fact, he's already signed up to go on our next trip. It's actually to El Salvador. I can't go on that trip. I could be the most wanted man in El Salvador. I'd be afraid to step out of the plane in El Salvador. Some Bitcoin guy might take a shot at me. So I'm going to pass on going to El Salvador. But Total Access has organized a trip to El Salvador for members. But he had just joined up, and so he happened to be at the New Orleans conference. But at a minimum, you need to go to schiffsovereign.com and sign up for our free newsletter, which, we're putting those out. Generally, 2 or 3 of them a week come out, and there's a lot of good content in there. So go schiffsovereign.com to sign up. Anyway, take care, everybody.